Hello everyone, this is Alejandro Cremades, and today we're going to be talking about how long it takes to raise capital for a startup. So understanding how long it takes to raise capital for a startup is one of the most difficult things. It's all about timing, it's all about getting all your ducks in a row, and one thing that always entrepreneurs ask themselves before they need to go out there. So in today's video, we're going to be covering in detail what it really takes to raise the money, how long it takes, and then really what are the processes? I mean, what are the different stages, the different phases, and then how to get it to a close. So with that being said, let's get into it. So raising a pre-seed financing round is probably the trickiest. This is the first stage or the first financing cycle in which you're going to be really raising money for your business for the very first time. And essentially at this point, you either don't have a network, you don't know how to do it, and it's super tricky because time is of the essence. You don't want to be investing time on raising money. You actually want to invest that time on optimizing for the execution of your business. So really at this point, you need to raise the small amount that you need in order to really polish further the team, polish further the product, and really get those different metrics that are going to convince the more sophisticated people. So here you're probably going to be raising from friends and family or even from outside investors. But again, if it's taking you longer than 6 months, probably what you want to do is get back to work, try to see if you can push the metric or traction, and then go back to outside investors. But again, you do not want to really get caught into a process that is dragging, that is taking forever, because at the end of the day, your business is going to suffer. So there's multiple rounds of funding. Founders are raising money 24/7. There's sometimes that they're more active and other times that they're less active. But at the end of the day, you're building your network and building the trust of that network all the time. Now, here's the thing. You're going to really give yourself, every time you raise money, 18 to 24 months of runway. So that means that at least every 24 months, you need to make sure that there's cash in the bank. Now, the beautiful thing about having, let's say, being at a Series A, now you're past the seed and the pre-seed, and now you're at a Series A, maybe where you're locking in institutional investors. Those could be investors that have enough money to continue supporting your business throughout the course of time. So obviously at this stage, what you want to make sure is that if these people come in and invest in your business and perhaps are sitting on your board, you want to make sure that you're keeping those people up to speed on everything that is happening with the business and getting them excited so that whenever the business needs money, they are actually the ones that give it to you, and that you avoid having to get out there, which is going to take a significant amount of time and a significant amount of distraction from your business. So the fundraising process can be simplified or at least summarized in 7 different steps, which are the following. Gather your data on achievements and forecasting your financial needs. Prepare your pitch deck. Start reaching out to potential investors with your ask. Attend investor meetings. Fill term sheets and proposals. Survive the due diligence process. Execute final documents and get the money wired in. So really what we're talking about here, the median average is about 6 months. I mean, just to negotiate that agreement that you're going to be getting between your lawyers and the lawyers of your investor, that could take up to a month. So that means that you already have 1 month allocated to legal drafting or whatever that is. So here what you need to account for is also the amount of time that it's going to take between the time that you identify the investor that you want to target to the time that you get that introduction. Ideally, the best introductions come from founders of portfolio companies that have received an investment in the last 6 to 12 months. Those are the entrepreneurs that you want to ask to receive an introduction to their investor so that you can get into that circle of trust as soon as possible. Now, in terms of time, going back to timing, if you're not doing, let's say, an equity round and you're doing maybe like a convertible note, which is much easier and quicker, you can even get the money in as simple as 90 days. But again, that's more on the lower end of the equation. So if we had to break down the timeline of the 6 months, the way that it would look like would be as follows. So the first step is going to be the initial introduction. So everything happens with you being introduced to that investor. Then there's going to be an email with an executive summary or even a pitch deck that is going to be exchanged between you and the investor. Then there's a first call that is scheduled between you and the investor to get to know each other. And then perhaps if they like what you're doing, there's going to be a follow-up meeting in person. After that follow-up meeting, then there's going to be like back and forth. Maybe there's like some questions that they have. Maybe they want the financial model or whatever that is. But then there will be a follow-up meeting where they bring you to meet perhaps other investors within the firm. After that, if they like what you're doing and perhaps like they even take you to a partners meeting or something of that nature, then they may agree to give you a term sheet. And after that term sheet, then you will receive perhaps the due diligence process. And then if everything is hitting the marks, then the offering documents are sent and then the cash is wired. So having said that, when it comes to really the timeline, you really want to make sure that you're making this a very airtight sales process. You want to make sure that you're passing the investors that you're speaking with from one end to the other, and then having them all at the same time in the same phase, because that's also going to boost your own confidence. So again, it could take a few days, it could take months. Just be strategic, don't get desperate, because if you get desperate and if you don't really have full visibility into what this process and what those different steps look like, you may be making some mistakes. So when it comes to the fundraising itself, there's going to be many different factors that are going to come into place and that are going to influence how fast you're able to get that round of money. Those factors are the following: the time of the year you're raising money, the strength and depth of your data, the quality and effectiveness of your pitch deck, your pitch presentation and performance in investor meetings, the strength of your relationship with investors, how complicated the due diligence is, how fast the lead investor in each round moves, how organized your accounting records are, your location, maybe Silicon Valley, New York, or somewhere else, market trends, availability of capital, and appetite for startup investments. So what if it takes longer than 6 months? So obviously here, what you're gonna have to do is you're gonna have to really stop it. You're gonna have to go back to the drawing board and you're going to need to reflect. If it's taking longer than 6 months, there's something fundamentally wrong, either with your pitch, with your business, or with your team. So you're going to need to go back to the drawing board, understand maybe what's not working out, and that's by figuring out some of the patterns of those concerns that the investors have shown during the time of meeting with them. So hopefully you like this video. If that was the case, make sure that you hit the like button below. Also hit the subscribe button so that you don't miss out on all the videos that we're rolling out every week. And then also leave a comment so that I understand what you're up to. We'd love to hear. And then take a look at the fundraising training, which is the program where we help entrepreneurs from A to C with everything related to fundraising. There you'll find live Q&As, templates, agreements, a community of entrepreneurs helping each other all over the world. And I think that you'll find tremendous value in it. So thank you so much for watching.